The research organizations were initially lower on the news. Most of the stocks also managed to close higher, with Charles River Labs a notable exception. For more, let's bring in Mizuho healthcare strategist Jared Holz. Jared, great to have you with us. Early on in the morning, you took this announcement, you dissected it, and you pointed out some of these companies that provide sort of these, preclinical laboratory services like Charles River. Do you think there is a lasting impact, even though a lot of them had reversed?
I do, and thanks for having me. I think the issue here is that with such a kind of protracted effort on the part of the FDA here, it's going to be very difficult for companies, I think, to manage over the near and medium term as we kind of transition away from these animal models to AI-generated computational models. And so I think the CROs that and some of the ones that you highlighted on the screen earlier are definitely susceptible to selling rather than buying, just too much uncertainty.
Mm-hmm. In terms of the use of AI, I think most Americans can imagine that AI will speed up drug discovery and reduce costs. Organoids are another story. Maybe people aren't so familiar with organoids. They're basically small organ-like organisms grown from stem cells that mimic the function of different organs like a brain or kidney or a liver, which enables testing in these little organoids as opposed to humans, which is obviously much faster and safer. In your estimation, how much will that reduce the cost of drug discovery, and how much faster can a drug get to market in your view?
Yeah, I'm not really sure, precisely what the timing is going to be in terms of reducing drugs to market or reducing the development timelines. But I'll say with respect to what's happening in the broader world with just introducing, various new technologies, with whether it's AI, whether it's the organoid models that we're talking about, part of the reason why I think investors have been so frustrated with biotech and pharma has been the fact that you've got, such a long period between kind of concept and getting to the market. That's been one of the gating factors, I think, to broader investment. So even if this is reduced by 20% or 10%, that's a positive. I mean, we're sitting here with pharma stocks at multi-year lows in some cases, biotech the same. So even if there's a very modest benefit in terms of timing, the time and the cost that it takes to get drugs to market is just so absurd. I think directionally, you have to look at this optimistically.
Right. We got just about a minute, but I do want to get your latest on pharma stocks, because I think a couple of days ago you had a note out saying that you see no reason to own them, that you would sell them. Do you still feel the same?
I still feel the same. I just think too many pressures. You've got loss of exclusivity, which we know towards the latter part of the decade and further than that. We've got the drug pricing situation with the IRA. We've got potential, other pricing dynamics that the government's introducing, plus the tariffs, which we don't really know, when or to what extent they're coming from. And is there enough to buy in the open market to kind of bridge the gap? So I would be selling on strength for pharma for sure.